Euro dollar. So the euro came back under pressure in Tuesday trade, but the price action was some inside day price action after a wild Monday session. At this point, overall, the broader downtrend remains intact while the market holds below 1467, and key support comes in at 108.19 below. A break below 108.19 would expose a retest of the 12-year low from earlier this year at 104.62, while back above 114.67 would take the pressure off the downside and open the door for a more significant correction. In the interim, you may want to pay attention to Monday's range highs and lows, which come in at 1278, 1279, and 109.55 respectively. Sterling dollar. So cable is in the process of pulling back after recently setting fresh 2015 highs at 59.30 several days back, and the market could be poised for deeper setbacks in the coming sessions towards some previous resistance now turned support in the form of the 155.50 area. At this point, a break back below 155.50 or above 159.30 will be required for clearer directional insight, although with the market holding above 155.50 for now, the structure continues to be quite constructive. Dollar yen. So dollar yen finally took out some key support in the form of 122, that previous resistance turned support, that breakout area that we had seen several months back, and the market just traded down below 122 to 121.94 thus far. However, the break could open the door for deeper setbacks in the sessions ahead, though the market is still locked within a more well-defined longer-term uptrend, so any setbacks below 122 should be very well supported ahead of 120, certainly in favor of the next medium-term higher low and bullish resumption back above the recent multi-year high set this year at 125.85. Euro Swiss. So Euro Swiss setbacks continue to be very well supported by this internal support that comes in around the 103 area, and the market has bounced out from just ahead of 103 in recent trade to trade back up above 104. At this point, fresh upside is favored back above recent highs that we saw at 105.75, with the break to open the door for a more significant upside extension towards the February peak at 108.15. Really, only a close back below 103 would give reason for concern, while a break back below the lows that we saw in April down in the 102s would negate the recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains locked within some consolidation over the past several days and weeks, but the market is locked within a well-defined downtrend, with recent rallies being very well capped ahead of 79 at 78.19. At this point, deeper setbacks are favored back below the recent low that we saw this year at 75.33, which also happens to be a multi-year low, and a break below that level will open the door for the next major downside extension towards the 70 area further down. Really, only back above recent highs at 78.19 would take the immediate pressure off the downside. Dollar CAD. So dollar CAD remains highly constructive on a medium-term basis, with the market being very well supported recently in the 121s ahead of this latest upside move. A break back above recent highs at 25.63 will confirm a fresh higher low now in place in the 121.30 area ahead of the next major upside extension towards a retest of the 2015 high at 28.35 further up. Kiwi dollar. So Kiwi continues to extend its declines to fresh 2015 and multi-year lows, trading down to the 67.47 area, or the 67.47 level, ahead of this latest minor bounce. But deeper setbacks are eventually favored towards a measured move in the 65 area, with any rally seen very well capped ahead of the 70 area. Ultimately, only back above 72.32 would compromise the immediate bearish outlook. However, there is some risk for some corrective price action in sessions ahead, with daily studies now tracking in oversold territory. SPX 500. So the S&P 500 has broken down in recent trade, and the market now is approaching critical support in the form of the March low at 2040. A break below this level will confirm the onset of a more significant top and accelerate declines further down below 2000. However, inability to take out 2040 will keep the pressure on the top side, potentially for a retest of that record high from May at 2137. Gold. So although we've seen setbacks in gold back down towards and just below 1170, the market continues to hold above 1170 on a daily close basis, which keeps the basing recovery outlook intact. Really, only a close below 1170 would give reason for concern and expose a retest of the 2014 base at 1130 further down. But while the market does hold above 1170 on a daily close basis, the recovery outlook does remain intact, and there is risk for fresh upside and a resumption of gains back above recent highs at 1232 and towards the 1300 area further up. We're reached a really important point right now with gold, so it'll be critical to see where we close over the coming sessions.